Okay, we're going to go ahead and get started. I want to welcome you. My name is Jennifer Young, and I represent University Credit Union. We are presenting information today on construction loans. And I'm going to ask you, we're just testing out some new equipment this morning, and so I'm going to ask a favor. I'm going to have somebody type in a question so that we can go ahead and test that. And the biggest question I have is, can you hear me okay? I know that sounds silly, but we're going to test just to make sure that you can hear okay. And somebody type in a question for us.
They raised hands.
Great, that works. You know what, I appreciate that. That gives us an idea of what's going on and that you can hear us okay. So again, I just want to say thanks for joining us. We appreciate you taking time. This will be a short webinar. We're going to go over information specific to new construction and talk about the programs that we offer here at the credit union. Just a few housekeeping items. My name is Jennifer Young, and again, I represent University Credit Union in their mortgage department. If you do have any questions along the way, I'd encourage you to type in those questions in the question tab, and we'll stop periodically and try and address some of those questions. And then at the end, we'll do that again. We'll cover some of the questions. I do have some questions that have been asked in the past, but we want to make sure that if you do have questions or concerns on it, that we address those as much as we can. Additionally, our mortgage department, you can see on the screen our mortgage department, that phone number 801-481-8840. You're welcome to reach out. That number rings on the desk of each of our mortgage consultants. And so if you do have questions, you can dial that and get directly to them. Okay, we're going to go ahead and get started and talk about the different types of construction loans that we offer here at the credit union. First off, let me just talk to you a little bit about what is a construction loan. A construction loan is the loan that provides the opportunity to build a home. So it provides the financing from when you're building a custom home, or if the builders that you hear about, Ivory Homes or Destination Homes, those big builders, that's what they're using to get the home built, the construction loan. During the construction loan, those payments on that are handled just a little bit differently than you would on a normal long-term mortgage. The construction loan itself, the interest or the payments are only interest. So whatever is accrued on that, as often as you draw on it. So if you start out and you just have a few things that need to be paid, and then a little bit more finishes on the home, so more gets advanced on the construction loan. Interest is charged on the funds as they're drawn. And so you don't really have to worry about these great big payments that you would on your normal mortgage. It's just the interest on loans. So it's a little bit different type of a loan than what your mortgage, your regular mortgage is. We do work specifically with custom construction. And so if you're buying from one of the big builders, you don't have to worry about that type of a construction loan. They offer to pay those and they take care of those on their own. What we're talking about specifically is a custom home, something that you've purchased the land, or you would like to purchase the land and build a custom home. Those are the type of construction loans that we're talking about. The first type of loan that we're going to talk about, we have a couple of different options for you on construction loans, but the first type of loan that we're going to cover is a one-time close construction loan. And what we mean by this is that you're going to be closing on the construction loan and the long-term loan prior to the start of construction. What that means is you're gonna sign a group of documents that address not only the course of construction, but actually the long-term financing as well. The difference on this loan is the long-term rate is actually locked up front before you start construction, and you pay one set of closing costs. So all of the closing costs are lumped into one amount at the beginning. You pay all those things, you start the construction, a specific term would be set up for the course of construction. So 6 months, 9 months, 12 months, whatever you anticipate the course of construction taking. And then at the end of the home being completed, we would just do a modification, just have you sign a few documents, and then it would convert automatically over onto your long-term loan, and that's when your long-term payments would start. So that one-time close construction is a very popular program. It allows you, again, the the confidence in the interest rate that you're locked up front. A lot of people like this, especially when the market is a little bit unsteady and they're nervous about the long-term rates. This gives you the option, like I said, to lock it up front. So that's the one-time close construction. The other program that we offer is called a two-time close construction loan. Now on the two-time close construction, you would have two sets of closing documents that you would sign and two steps through the process. So the first step would be you would close on your construction loan prior to beginning construction, prior to beginning any kind of work on the property itself. You would close on your construction loan. That construction loan will take you through that course of construction, the course of building the home, the course of finalizing everything with the inspectors. And once everything is 100% done and you have a certificate of occupancy with the city, then it would be ready at that point to close on your long-term loan. And then you would sign another set of documents that would cover the long-term loan, a standard mortgage. Now, the long-term rate would not be locked in on this until you're about 30 days from completion on the home. And so you do have that variable that you would be tied to whatever market rates would do. There are two sets of closing costs. So your construction closing costs and then your long-term closing costs. The nice thing with a credit union though is that we do allow you a 0.5% credit towards your long-term closing costs. So let me just explain that just a little bit. If you close on your construction loan, we collect X amount of dollars for the closing costs. When you're ready to close on your long-term, we're going to take what you paid at the construction loan and give you 0.5% credit towards your long-term closing costs. And typically that amount covers most all of your closing costs. And so it really helps you to offset. We don't want you to feel like it's overwhelming to have two sets of closing costs. So that extra credit towards really helps to absorb that extra cost. The two-time closing loan is typically needed when you get into jumbo financing. So if you're in a situation where you're going to go over a loan size of about $453,000 in the Salt Lake County, or sorry, in all of the other counties except for Salt Lake. Salt Lake County, you can actually go up. The limits in Salt Lake County are $600, $300. But if you're in that category, we're going to push you to a two-time close. The one-time close is limited to Fannie Mae conforming limits. And I know that those are going to bring up questions. And so we want to make sure if you do have questions on it, we'll try and address a few of those later, but just know that the one-time closes for conforming amounts, two-time closes when you get into jumbo amounts, loan amounts that are going to be higher than that $453,000 amount. There are some things that you need to be and understand about construction loans. Construction loans do have a lower interest rate during the course of construction. And as I mentioned before, you will be required to pay interest-only payments during the course of construction. And again, let me just address. So if at the very first, if there's an advance that needs to pay off the lot, if there's an advance that needs to go for deposits on things, deposits for cabinets or flooring or electrical or plumbing, all of those different things, those are things that are going to be advanced at the first. And then throughout the course of construction, the balance on the construction loan is going to increase. And so we're going to work with you. The interest payments are going to be on whatever has been drawn through that point. And so again, interest rates during the construction are low. You have interest only payments. You do have options on the terms. You can do a 6, 9, or 12 month build out time. And we will go up to 95% of the value or the cost, whichever is most limiting. We do address loan amounts and offer loan amounts up to $2.5 million. And we actually will consider going above that $2.5 million mark. It really depends on the property and it depends on the situation. Sometimes in that situation above $2.5 million will require you to go into our commercial loan department and work with that department. But we do want to entertain those and look at those. And our construction loans are offered for primary and secondary homes only. So if this is going to be a second home or a vacation type property, we do want to look at that for you. But we do have, the only restriction that I can tell you on that is that the properties have to have year-round access. And so we want to make sure that we don't, especially with our weather here in Utah, that you have to have year-round access on those. Now, just to kind of give you a scenario, a brief overlook at the comparison between a one-time and a two-time construction loan. Again, the one-time, you'll have a one-time closing, lock in the long-term rate up front, and the loan amounts are restricted to your county loan limits. A reminder, your county loan limits, all of the counties in Utah, with the exception of 3, Summit, Salt Lake, and Tooele, the loan limit is $453,100. Now, on the Salt Lake County loan limit and Tooele loan limits are $600,300, and Summit County has a loan limit of $679,650. So those limits give you an idea of what you're looking at. But again, reach out to us and let us know if you have questions. Now, on the two-time close, again, you close twice. Your long-term loan is locked in when the home is complete. The loan amounts can exceed your county loan limits. We will go up to the $2.5 million, and we'll consider $2.5 million and above through our commercial lending department. So if you do have questions on those, give us a chance to help you through and answer those questions. So I want to just cover some of the process that you'll be required and that you'll go through the course of construction. Sorry, tongue-tied. Number one thing that you need to know is you do have to have a general contractor in this process. We do not offer owner-builder construction loans. We do require that you have a general contractor that you have a formal contract with, and we're going to require information provided by that general contractor to evaluate them as well. The documentation that we're going to gather from both you and the builder is going to be exactly the same type of information that we would gather for a regular mortgage. We're going to ask you to provide us with income information. We're going to ask for documentation on where the down payment, where your assets are coming from that you're putting into the transaction. We're going to get information on the land, make sure what you paid for it, document all of that information. And we're also going to ask the builder to provide us with specific information. We really want to make sure, our job is to make sure that you're getting into something that is going to be very doable and have a good experience. And we want to make sure that the builder is up to that the builder is going to provide you with that kind of an experience. So we're going to ask for information from the builder, things like their insurance information. We're going to get year-to-date profit and loss statements to make sure that they're stable and strong. We're going to get a copy of their current license and make sure that they're in a good standing with the state construction registry. We're going to do that background check and that information check for you as our member to make sure that they're in good standings. Now, one of the questions that we've gotten from time to time is, do we have to have, can you only work with a builder that's on our approved list? And the answer is no. We would like to work with whoever you would like to, but we are going to do that check on them. We're going to make sure that they're in good standing and make sure that they are somebody that you're going to have a good experience with, and make sure that it's going to go well. So just anticipate that we're going to ask and make sure that if you have a builder that you're working with, that they know that we're going to ask for specific information. We're going to require it and then review that information. So once we get the information, once we get your application and all of the documentation that we ask, we're going to put together a preliminary loan approval. And that just tells you what you can anticipate that you're approved for. There may be some questions that come up along the way. If you're worried about the amount that you've requested, are you going to qualify? And this is what this is going to cover. We're going to make sure that we've evaluated and we give you a loan approval that says we know and we can approve you for this much. And it will give you any kind of conditions that the underwriter, maybe the underwriter wants to see an additional pay stub, or they want to see more of a history on where the assets are coming from. Some minor things, but we'll put together a preliminary loan approval that will tell you, again, exactly what you can approve for and anticipate. And at that point, then we're going to do an appraisal and title. Now, the appraisals on construction loans are kind of tricky. We do as subject to completion. And so for the appraisal, we need a copy of an electronic set of your plans and specs. And then we'll also need a cost breakdown and a copy of the contract with you and the builder. that address the quality that you're finishing in the home. We want to make sure that you're getting full benefit for the finishes that you're doing. And so we're going to be very thorough, and the appraiser is going to be very thorough in the set of plans and specs, making sure that they're addressing the standard, the quality, the finishes, those types of things to give you full benefit. And then we're going to make sure on the title report that that we've ensured that there aren't any prior liens on the property. And then once we get all that information, we're going to put together a final loan approval. And your final loan approval just says that you've been formally approved, everything is done. There may be some like I said, follow-up questions with the underwriter, but at this point, you're really ready at this point to go ahead and formalize and get closed. Once you're to that point, you'll go to the title company and sign your closing documents. And these closing documents, depending on whether it's a one-time close or a two-time close, are going to be very similar. Your closing documents are going to include the note, the deed of trust, and all of those other documents that you're typically required to sign on a mortgage, as well as some that are just specific to construction that address the issue that the construction interest is charged monthly and that you'll be allowed draws monthly, those types of things that are specific to a construction loan. But at this point, the closing it with the title company, that's when all of the final transfer of funds, that's when you're required to come up with the rest of your investment that's in this transaction. And then once everything is finalized, the deed of trust is recorded, we get a clearance from the title company that everything has been done, then you'll start into the construction. The draws, when you start construction, the way that you access the funds on the construction loan are called draws, and those draws are handled through our loan administration department. Those draws are typically presented by the builder and you working together to make sure that they are submitting for work that has already been completed on the home. The only things that we're going to allow advances up front would be security deposits or deposits that you have to put on things like I mentioned to begin with. If you have to put plumbing or electrical or cabinets, sometimes flooring, those types of things where you have to put deposits down to order things to get them ready. Those are things that are allowed. But other than that, the work on the home needs to be completed prior to being paid. And so the draw is going to be a piece of paper that has who's going to be paid, what they're going to be paid for, and then they're going to attach an invoice to it that just says, this is what's been completed, this is who completed it, and who payment is going to. Though again, those are handled by our loan administration department. That was probably way too much information for you, but it gives you an idea of what happens through that course of construction and through the draw process. Now, once you get through that process, and sometimes it goes really quick, and sometimes I want you to know that construction can be one of those tricky things. Like, we've had a great winter, and there's been a lot of dry days, and there's been a lot of construction that's been going on. But boy, it changes so quick, especially here in Utah. And you could have a really wet, soggy winter. And so going into the winter months, there are a lot of variables that can happen with construction. But construction is like that. It's kind of like that. Construction loans can be a real variable. And so just know that we're here to help you through that. We're here to help you and answer questions and kind of help you through the process. And it can be really fun and it can be really aggravating, and you could just want to tear somebody's hair out. So, but once you finish the home, once everything's finished on the home and you're ready, you've got your certificate of occupancy from the city and you're ready to go ahead and convert, we'll convert this over to the long-term loan. Now, if you're on a one-time close, you just will sign a few documents that address the conversion over to the long-term loan. And when I say long-term loan, that's your mortgage, your long-term mortgage. So on a 15-year or 30-year. And if you're on a two-time close, then you'll be required to sign a new set of closing documents that will include all of the terms for the long-term loan. So that's what happens once the home is complete. We'll just do the conversion over to the long-term loan. Now I'm gonna cover just a few do's and don'ts. So do's, just check with your mortgage consultant before making any changes. And that includes changes not only to the home, but that also includes changes to your credit, changes to your employment status, changes, any of those things that are going to impact your overall qualifying for this home. We want to make sure that you just keep in touch with us. Best thing is, when in doubt, call us. And there are no negative questions, there are no bad questions. So just keep in touch with us. and keep in touch with your builder through the construction process. I know that goes without saying, but we just want to encourage you, keep in touch. Make sure that you're visiting the site often. Make sure that you're looking at how things are being done. Communicate with the subcontractors that are there, that you are the owner and that you're there and you're watching, and that you want to make sure that things are going the way that you expect. And then if you do have questions along the way, contact your mortgage consultant and let us help you through that process. Any question, again, nothing's off limits. Ask us and we'll try and help you through the process. Some of the don'ts that you need to really watch and make sure. Please, please, please do not start construction before the construction loan records. This is a really important step. It's really important to understand that if you do anything on that property prior to the construction loan and the deed of trust being recorded, it can affect the ability and the quickness that we can do this loan. It can cause delays. There are a lot of things that kind of go behind the scenes with construction loans. And I'm happy to work with you. I'm happy to answer those questions, but it's just really important to know, don't move any dirt. Don't go out and start digging. Don't do anything on that site before your construction loan starts, because it really can delay the process overall. Another don't is don't incur any new debt or increase any of your lines during the course of construction. That's probably the single biggest struggle that we run into, is that people get going and they go to Home Depot to look at a couple of things, and Home Depot says, here's our card, you need it, look at all these savings you can have, and they fall trapped to that. And the biggest thing that I can tell you is communicate with your mortgage consultant and let them know, so that if it is going to impact your qualifying, they can help you prevent any problems that would be down the road. So don't incur any new debt, and check with your mortgage consultant and make sure, if you do have to get in that situation, that it's not going to affect your qualifying. Last thing we want is to have you build a beautiful new home and then not be able to qualify for it. Another don't is don't change your income. Don't change jobs. We've run into this a couple of times, and we do want to work through this with you, and we do want to help you. So if you're facing that, please communicate with us. Please reach out to us and let us know what the situation is, and we'll help you through the process and make sure that, again, it doesn't impact your long-term qualifying. And lastly, don't change from the original set of plans and specs. That should be, you should be pretty firmly decided and pretty committed on your set of plans and costs when you start your construction. And if there are any changes that come up, if you decide that you don't like where this wall is and you want to move this wall, please, please, please get us involved so that we can go ahead and get those changes recognized and get the appraiser out there and address any of those changes that you do. Not only impact your costs in the home, but it will incur additional costs for additional inspections that need to be completed. So no, it's really important to stick to your plans and costs right when you first start, and don't deviate from those. It's just a really important thing to remember. The last thing I wanted to go over is we do offer lot loans, and our lot loans, that's funny, our lot loans are offered at 70% loan to value. Now that's something I just wanted to make sure and cover, and I'm sorry, we'll put a screen together and put that up for the next presentation, but 70%, we'll do 70% of the purchase price or appraisal value, whichever's limiting. And on our lot loans, we will do a credit score down as far as 620. And the way that our lot loans work, they're meant to be a temporary loan. It's figured on a 15-year amortization with a 2-year call. So you have 2 years basically to get your plans and specs together and then get started on the construction. And our rates start down as low as 6%, but it's determined by your FICO score and the loan to value. And again, I mentioned earlier, but the only restriction that we have on that, we have property restrictions that it does have to be year-round access for the property. So just make sure that you know, and even on the lot loans, it's the same thing, year-round access on those. We're going to take just a minute, and you're going to see some changes in your screen, and I'm going to ask James if he will look at questions that we have and see if we can address some of the questions that have come in.
All right, let's see. Let me pull this down.
While he's getting to that, I'm going to tell you one of the questions that we get often is, what if I have cost overruns, things that I originally planned for didn't come in at that price and they were more expensive? We can help you through that. We do require a contingency line item. We require a 5% contingency for those types of things, for cost overruns. But I will tell you, we're very cautious with dispersing funds from those contingencies. If you, for instance, if you came in and said, oh my gosh, you have a contingency of 15,000, and at the very first of construction, you come to us and say, we've decided that our flooring is going to be this, and it's going to be $15,000 more. We probably won't let you draw from that contingency because it's at the very first of construction and we don't know what the other cost overruns are going to be. And so if there are certain overruns, you may be required to pay those out of pocket. I'm going to tell you, it's really best to know if you have a budget, stick to it. And if you plan on going over, plan on paying those out of pocket. At the end, you may be able to recoup some of that money out of your contingency, but up front, you're going to be required to pay for those. So just know, we'll try and help you through it with that 5% contingency. But again, this is a reminder, you really need to be set on your costs and expect and anticipate to stay to those budgets.
Okay, so Jenny asks, does this also apply to home additions and renovations, not just new build?
Jenny, that's a great question. So we do renovations a lot with our construction loans, and we prefer to handle them that way, especially if you're going to be doing a big renovation. That's probably one of the biggest things that we get asked right now is for a construction loan where they're going in and doing a complete gut and remodel, where they're just going to go in and take it down to bare walls and that. And yes, this is the perfect type of product to work with you on that type of thing. That's a great question, Jenny.
Wayne asks, what about construction loans for finishing a full basement? Estimated costs of 80 to 100K, about 1,200 square feet.
So Wayne, that's a really good question. Construction loans are great for a lot of things. Where you're talking about finishing a basement, it would really depend on the overall prices and the overall loan that your existing mortgage. If you have an existing mortgage that's at 3% or 3.25%, I'm going to try and talk you into keeping that because that's a great rate. If we can combine and do an anticipated value, and if we can see that that's going to add, especially with basements are kind of tricky. They kind of cost more than you actually recoup in the value of the home. And so it depends on what your value is now. If you've got a good equity position now and you can utilize that and it works best. But those are the kind of things, Wayne, that's a good question, but those are the kind of things that we can help you see what works best for you. Contact one of our mortgage consultants. Reach out to them, ask them, say, this is a situation, and they'll run several different scenarios for you. They'll run a scenario where it's a total cash out refinance and you're accessing that. We'll run a scenario with a construction loan. We'll run a scenario, maybe you don't need either of those and you need to do a home equity line of credit that allows you to access 100% equity. We'll run several different scenarios and run those for you and see what works. Our job is to give you options. Your job is to pick what works best for you because in the end, you're really the only one that knows that.
Natalie asks, can I use these construction loans on building a multifamily that I plan on living in on one of the units if the multifamily is smaller than a fourplex or smaller?
Okay, great question. The answer is yes. You will go, we will require that you work with our commercial department on that type of a property, just because when you get into multi-units, that's when we have to kind of tap out and turn it over to our commercial department. But yes, the credit union does offer those types of programs and those types of loans. So reach out to us, let us know, and we'll get you the hookup with a commercial loan officer that can help you through that. It's a really good question.
I guess if anyone has any more questions, just enter them.
Okay, one of the questions that we have is, let's see, credit score requirement, that was it, credit score requirements. So credit score requirements on the conforming Fannie Mae loans, so anything that is within that 453 for outside counties of Salt Lake, and then in Salt Lake up to 600, 300, need to be 620 or higher. I'm going to tell you that we err on the side of caution with credit. And so if you're pushing that 620 or if you're bouncing right around there, you're going to see that we're going to be a little bit more stingy and we're going to be a little bit more cautious and careful with our lending with those. Construction loans are a risky loan that we get into. And so we're very careful and credit plays a big portion of this. On jumbo loans, your credit score cannot be below 700. We do look at them on a case-by-case basis. but we do require a 700 minimum. So just know that it plays a big, heavy part of our decision is the FICO scores and credit. A question that I had too was, can you build on a multi-acre parcel and then subdivide it after? And the question, that's a great question. And the answer is no, you can't. We take the parcel as however it is presented to us. If it's presented as a parcel that is 7 acres or 5 acres or 3 acres, we take that whole parcel. And then to release any of it later down the line is we just don't do it. And so here's what you would have to do. If you're looking at doing that very same thing, if you have a multi-acre parcel, you would need to go ahead and have it subdivided and broken into the separate parcels, and then come in and show us which parcel you're going to be building on. And we would take that as the encumbrance. We want to make sure that we don't have to be involved with releasing. It's confusing. The investors get cranky. They just don't like doing that. That's one of those things that's very difficult down the road. So you really need to have it taken care of up front. But that's a really good question.
I think I skipped Stephen, but maybe you already answered it. What, I must have missed it. What is the minimum credit score requirement for a one-time closed loan?
Good. And Stephen, hopefully we answered those questions with a credit. So again, Fannie Mae conforming 620 for your FICO score. And if you go into the jumbo category, a 700 FICO score. That's a good reminder. Thank you. I appreciate that.
Oh, okay. Thanks, Stephen. Let's see. Jerry asks, is the $453,000 limit for the construction loan in the long-term mortgage?
So if you go over that, we just put you into a different category. So if you go over the 453.1, then it goes into a jumbo category. And so we would require that you do a 2-time close. We don't offer one-time close on jumbo. So the 2-time close, it just affects it that way. It is not the limit on both the long-term and the construction. It just depends on what category you fall in. I hope that makes sense. It's probably confusing. Sorry, Jerry. But you know what? Reach out to us and call, and just know we're going to help you and fit into whatever category and whatever we need to do to help make it work. And those are just those numbers, the loan amounts. Those are just numbers of categories that we're going to put you in, whether you're conforming or jumbo. It doesn't mean you can't go over that amount. You just go into a different category.
Jerry says that makes sense. What down payment is necessary?
Okay, so see, thank you. You keep me on my toes, Jerry. That's a good thing. So if you're in conforming, if you're under that 453.1, then we will actually go up to 95% loan to value or cost, whichever's most limiting. Now I say that, you guys, and you need to know, if you have a cost and the appraisal comes in much higher, we're going to use cost to determine our loan amount. We say whichever's lower. On jumbo, if you go over that amount, then you're required to have a 20% investment. We do not offer financing, construction financing over 80% financing when it's a jumbo. So when you go into that larger loan category. It's a good question, Jerry. Thank you very much. Like I said, you keep me on my toes. Okay, we're gonna wait for just a minute more and see if there's any more questions that come in and see if we can't address those. Okay, I don't really see any more questions coming in. I just want to again reach out and say thank you so much. We appreciate it. If you do have questions, don't ever hesitate to reach out to us. I know you all know where we are. I know you can find us. The direct line again is 801-481-8840. That goes directly to the mortgage consultants, and we're happy to answer any of the questions that you have. I'm going to answer one more question. Jerry has one more question for us. Thank you very much. The question is, how long does the process take after we get our stuff in? It takes, usually what you need to anticipate is you need to anticipate about 45 to 60 days. It doesn't always take that long, but you need to expect that because there's a process of evaluating not only your information, but the builder information. The title company does have to do a little bit more research for us, and they do have to search through the state construction registry. And it usually takes, like I said, about 45 to 60 days. Expect that, and then I would rather surprise you and say, you know, we're ready at 30 days. It doesn't always take that extra time, but just in case, we just want to make sure. And Jerry, thank you. I appreciate asking. Again, my name is Jennifer Young. I'm actually the sales manager over the team of mortgage consultants here at the credit union. And we've got a great team. They're very well experienced and we love construction. So we're really excited to be able to answer any questions and help you through the process. And the most fun for me is the day that you're able to close and you walk into that new beautiful home that you've designed from ground up. It's really a fun process. So thank you very much. Again, if you have any questions, reach out to us and good luck. We're excited to help you through the process.